Hey everyone, I want to give you a quick housing market update because a lot has changed over the last week. And if you're thinking about buying or selling, this is something worth paying attention to. The big story is that from a housing and mortgage standpoint, we had two major forces colliding at the same time. First, last week's job data came in weaker than expected. In a normal situation, weaker job number and a softer labor market tend to help mortgage rate come down because it increased the likelihood that the Federal Reserve will eventually have more room to cut rates. That usually puts downward pressure on bond yields, and mortgage rate usually follows. So, before this latest conflict with Iran escalated, the direction we were watching was actually pretty encouraging. Based on the softer job data and the unemployment rate, it looked like we were very likely heading towards mortgage rate falling deeper into the mid to upper 5% range. That would have been a very positive sign for the housing market because lower rates increase buyers' purchase power and generally bring more confidence back into the market. But then the second force hit, the geopolitical side. As tension around Iran escalated, market immediately start reacting to the uncertainties. And whenever there is conflict in the region that can affect global oil supply, investors begin worrying about rising gas prices, higher energy costs, and renewal inflation pressure. So even though the economic data by itself was pointing to a lower rate, the uncertainty from war started pushing the market in the opposite direction. And that's why we actually saw mortgage rate ticked up a little bit last week, despite the weak job data. On the surface, that can feel confusing because normally weak job data would help rate improve. But when global instability enters the picture, markets start to price in the risk, and that can temporarily interrupt the downward trend. Now, here's the good news, is that rates have already started coming down a little bit this week as some of the initial fear has eased and market is starting to digest everything a little more calmly. So, what does this mean for the housing market? It means we're in a market where rates are still trending based on economic fundamental, but global headlines can create short-term volatility. In other words, the underlying setup was improving for housing, but geopolitical uncertainty created a temporary bump in the road. Now, what does it mean for buyers and sellers? For buyers, this means opportunity is still there, especially if rates continue to ease again. For sellers, it means serious buyers are still watching the market closely, but affordability remains a key factor. So pricing and preparation matters more than ever. Here's the biggest takeaway. If the conflict cools down and inflation fear ease, we could see rate trend lower from here. But in the short term, expect more movement up and down and more sensitivity to major news. So, if you're wondering whether this changes your plans to buy, sell, or move this year, feel free to reach out. I'd be more than happy to talk through what this means for you and your specific situation. Thank you again for watching. This is Jack Ma with Century 21. I'll talk to you soon. Bye-bye.